Enjoy the rest of your day. Let's also invite Sanjay Parekh, founder and chief investment officer at Soham Asset Managers, on the show. Sanjay, afternoon. This is Reema here. I remember in the previous interaction that we had, you'd indicated your tilt was more towards large cap in the India Opportunities Fund. I think 3/4 of your percentage holding was in large caps, and in high single digits was the exposure to small caps and about 10-12% to mid caps. Now, considering the kind of rally that we've seen in the mid and in the small cap space, would you look to tilt your asset allocation in any way?
Yeah, no, good afternoon, Reema. So essentially, we look at mid and small cap on a bottom-up basis. And the ideal conversation we have when we evaluate a mid and small cap is, can it double in 3 years? If not, at least in 4 years. And of course, we would have a filtering criteria in terms of quality of business, promoter comfort, the business character, and the most important being valuation. So, as the markets are moving up on mid and small cap, there is some element of euphoria, and you obviously don't get those, attractive bets that you want the right valuation. So we have on our radar 50, 55 businesses, but the most important criteria of attractive valuation is missing in a lot of them. So we do look, search hard for it, but there are few plays as of now. Having said that, always there's an opportunity. I mean, we are positive and bullish on India. You could have small reactions, but on the ground, when we meet companies, there's tremendous amount of activity on the manufacturing side, on industrial side. The ancillaries would be supporting to those investments. So you need to search hard without compromising that filter and look for opportunities. That's our approach that we have.
So Sanjay, hi, good afternoon. Looking for opportunities on manufacturing among other sectors. That's interesting, right? Because that's where we've already seen a lot of excitement, enthusiasm, a run up in stock prices as well. So could you narrow that down further for us? I mean, how are you dissecting the opportunity? What kind of companies, what sectors, and what are the filters that you're now putting in place? Because there is already a huge run up in prices.
Yeah, but I'll tell you, let's say an ancillary company, auto ancillary company, which we own, again, a leading player in a global space, Samvardhan Motherson. Again, there's still, we believe, can have a huge opportunity. It is dependent on the global sales of vehicles, but it's an extremely dominant player, increasing its market share, doing acquisitions. So this is one area. Second is logistics. Again, we like that space. Then some of the ancillaries. So we have we have a clear bet on the leading power player who is transiting from thermal power to renewable, JSW Energy, and then a lot of ancillaries. So it could be a power ancillary, it could be an EPC player who is supplying to power. So you certainly there will be opportunities. The whole new hydrogen that we see, who are the players who would be supplying to them? In the recent conference, we just met some of them, who would be a big beneficiary of this. Some of them who are contractors to the real estate space. So there are opportunities, just that, you certainly have to avoid where there are working capital guzzlers. They don't effectively manage their working capital and yet grow profitably, and the right comfort that you have on management. So there are companies, as I said, you just have to dig hard and look for it on a bottom-up basis.
Hi, Sanjay. I was just looking at your portfolio performance and you've outperformed the market. So kudos to you on that front. But, a couple of sectors that I was looking at in the construction materials, some of those cement names, we have been discussing that on the channel itself, and things are looking up.
Yes.
You are relatively, you have a higher weight to this space, some of the cement companies in comparison to what the index has. Do you continue to hold on to that, or do you believe now we're reaching maybe a tipping point? Maybe you like to take some money off the table?
Yeah, so Nigel, one is very clearly the investment activities is clearly quite buoyant. and it will only get better from September as we move out of the rainy season. It's already there on the ground. Now, how do you participate? So you participate either through capital goods, where we have some representation in the largest conglomerate, Larsen & Toubro. Then second is cement. Cement, we believe, it will be a structural positive play. The utilization levels on an aggregate basis are low, but the demand will certainly surprise, and the larger players will disproportionately get the share. And a lot of time people look at the cement capacity utilization, but they don't look at clinker capacity utilization. And in certain pockets, there is surplus in certain pockets, but certain pockets, it is a situation where there could be some pricing power. So it's not straight up, but I think if demand growth were to be good, the larger players will benefit. And of course, again, would be at the right valuation. And that's where we have entered at the larger players at the right valuation. We'll continue to hold on. And then we, of course, participated through the logistics scheme, through a leading port, and in the digital space delivery, where we believe they will also be beneficiaries. So if the trade were to go up, the overall investment activity were to go up, we look for plays where they are reasonable in valuation. So that's where we participated through the whole bunch of investment theme that we like in our portfolios.
Sanjay, any stocks where you've booked profits, either partly or completely?
Yeah, so we had a wagon company where we played the railways, the whole theme, where we saw capacity being short and demand was far outstripping it. It was a very respectable name, Jupiter Wagon, and doing quite well. And we entered quite early, and then we booked profits. We also booked profits in one of the EMS company where we bought in very early. But again, we have a discipline of our value assumption. And when your value assumption on FY21 also exceeds by 20-30%, we do book profit. So booking profits is very normal for us. But we look for secular names. But if the value far exceeds the price on 25 also, then we would certainly book profits. And that's what we have done.
Okay, so Sanjay, leave us with, let's say, the theme that's exciting you the most right now. We've spoken about a couple of them, auto ancillaries. You mentioned some of these power names as well. So for all the incremental money that you get, I think you're still sitting on 5-6% cash in the fund, if I'm not mistaken. So,
yes.
Where would you want to deploy that? Where are you looking for the most exciting opportunities?
Yeah, so, again, the domestic themes. I mean, the entire domestic theme, be it in the cement space, there are still opportunities. As I said, the utility, the power or the power ancillary, we are looking at a few of them. Certain EPC companies also, if they're managing the working capital, is where we are looking, and we are positive. As I said, logistics is where we are already there. So the entire domestic theme, we are very positive, and on the global themes, we are a little sanguine. Some of it is getting better on valuation, but we still believe the India growth story on the investment side, or even in the financials, which is again, a bet on consumption and investment, is what we like, and that's where we're going to be continuing. Even on the real estate piece, we have an investment which we like, and of course, telecom we like because of consolidation. So all these players, and it's generally, worked for us in the last 15 months. We're outperforming by 10% over Nifty TRI. So it's worked for us, and that's where we're going to bet even our incremental money.
Okay, all right, Sanjay. Well, if you're outperforming, then definitely your clientele will be very, very happy. So hopefully you're going to be making a lot more money from them. But we have got a few takeaways from there. Booked out on one of those railway-related stocks, which is Jupiter Wagons, an EMS company, but you're getting a little bit more bullish on the logistics space as well. Thanks so much for joining us, Sanjay, and filling us in with your quick take on markets and how you're positioning yourself. For the time being, we'll slip into a short break, but as always, on the other side, we'll get you an insight into D-Street chatter. We'll also get in some technical calls. Stay with us.